Welcome to the 5th annual FT Commodities Global Summit. I'm joined this afternoon by Marco Dunand, the Chief Executive of Mercuria. Marco, welcome.
Thank you.
Today we've been hearing a lot about oil trading last year. Very good conditions. People seem to have made good profits. How is this year looking, 2016? Are you positive on the outlook?
I think this year is going to be a little bit more difficult. I think last year there was a clear trend, a downward trend. The contango were quite deep, so for those people who move commodities around in oil storage, the contango would pay hefty return on investment, but traders are committed to storage, whether the market is a contango and backwardation, they have to pay the cost for it. So my guess is going to be the trend is not going to be as clear as last year, and the contango is not going to be as steep, and therefore it's probably going to be a bit more challenging. A bit more challenging,
okay. Now, it's almost 2 years, I think I'm right in saying, and since you completed the acquisition of JPMorgan's physical commodities business. How has that gone? I mean, the integration presumably is complete now. What sort of benefits has that deal brought to Mercuria?
So the benefit was, the intention at the beginning was to try to have more geographical spreads about our activity between North America, Europe and Asia. So we now have about a third in each of the regions, so from that perspective we're happy. We also have a thriving sort of physical power and gas business in the US, and I think that's also going to bring, hopefully a bit of increased revenue to the bottom line in the next year or two. Some of it will depend on volatility of gas. There's been no winter this year, so gas has been reasonably flat. And some of it will come from us being able to enter with the counterparty that we got from JPMorgan. We would like to increase the level of business, maybe in structuring activity, hedging, physical, and so on and so forth. So we build the ground floor, and now we're going to hopefully build more above the ground floor going forward.
Okay, so to continue with the building analogy then, you've recently struck another deal. You sold 12% of the company to ChemChina. Could you tell us a bit more about the rationale for doing that? I mean, I think you've said before it's not about capital. Is it about opening new markets, new opportunities for the company?
Yeah, I think we were looking for partners which would have synergy with us. Obviously, ChemChina being a large refiner in China and needing to acquire feedstocks and crude oil from around the world, and with our 30+ offices, we think we have a lot of experience and knowledge about the international market. So hopefully we'll be able to find synergy between the two groups, and we'll be able to help them acquiring, feedstocks at lower prices, and we'll be able at the same time to benefit, from the refining system. The deal is an arm's length deal, therefore it doesn't give us the right to deliver all to the refinery, and we have to demonstrate that we can bring values. But we think it's a very good first step. We have a good feel with ChemChina. We've known them for many years, and we think they are the right partner for us. They tend to give a lot of freedom to management, and we think that the situation will probably develop further over the next few years and intensify between the two groups.
And I guess the deal also sort of demonstrates your sort of commitment to China, whereas other people might be wary of the country. You've done this deal. You recently did a deal involving your warehousing business as well, again bringing in a Chinese partner there. So China is still something that interests you and you see good opportunities.
Very much so, and I think China obviously is a big consumer of commodity, and therefore it's a natural partner for us. The deal that you're referring to with Henry Bass was we sold 50% of Henry Bass that we had acquired from JPMorgan to CMST, which is the largest logistic company in China. And the idea is to try to create a bridge between the LME and the Chinese sort of Shanghai market for metal, and find a secure and safe place to store metal in China by using warrants which is similar to the LME one. And hopefully they will develop over the next couple of years.
Okay, one final question, just on the oil price. Mercuria moves a lot of oil around the world. Based on the patterns you're seeing in supply and demand, do you sort of have a strong feeling on the direction of prices in the year ahead?
Well, our guess, as most people, is that the market will rebalance towards the end of this year, and we may probably start drawing some of the excess inventory next year. Of course, a lot depends on the Doha meeting, taking place next week. The expectation from the market in general on this meeting are not that high. Most people think that it's unlikely that some strong agreement will come from there. But the market has sort of started tipping up in the last week or so. So maybe the perception starts slowly changing, and there could be a surprise, even though most people do not expect a surprise in terms of an agreement coming from there. Obviously, an agreement which would entail freezing production or reducing production would get us to rebalance the markets much faster. than the original plan, which is 217.
Okay, and if I can just ask one question, your position of Chief Executive, what's your focus for the year ahead? What are you going to be focusing and concentrating on?
I think it's to build on the basis that we've acquired the JP business, we have sort of extended our business on the LME, on metals and so forth. It's to basically grow deeper into our relationship with our counterparties.
Marco Dunand, thank you very much.
Thank you.